What is up, guys? I'm back yet again with another one. In this video, I share a snippet of a session with my student where we dissected a chart and it played out exactly as speculated. Be sure to visit this instrument and practice with the same concepts shared in this video. So now, top-down analysis means exactly that. It means that you're going to analyze this chart coming from the highest time frame possible, and you want to typically stop that analysis on the H1 or the M30, which we will hopefully have received our key point of interest, our area where we want to buy or sell, judging from what the different timeframes have shown us. Now, this top-down analysis part is the difficult part about trading. If everything was just that market structure we've just discussed, trust me, everyone would be a billionaire. But now, being able to interpret that information from the past, spanning across all these different timeframes, is what produces the uncertainty at times. Meaning, you can never be 100% in trading, right? You can only win more than you lose. It's impossible that you have a trader that tells you that this year I didn't lose a trade. That's just not how it's going to happen. This is why, once again, we use the stop loss function. We use risk management so that when we're wrong, we can be embarrassed but not destroyed. We can just laugh about it and say, whew, that was a bad one. But at least you have your account. Okay. All right. So here we go. Now I'm going to perform a top-down analysis, and the function of it is so that you can understand how we need to apply the different market structures while we're going down from the monthly, and then typically we want to stop on the H1 and M30 to make a decision. At the end of the top-down analysis, there's three things that can happen for you. You can either know that you're going to buy, you can either know that you're going to sell, or you can either know that you're going to do nothing. Right, because doing nothing is also a form of trading. That most people don't want to hear that part, but it's also most good traders know when not to do anything. You understand? When the market conditions are just not allowing for what you're seeing, all right? Or for what you'd like to see. So quickly on the monthly time frame right now, I want to make this part a bit interactive. What can you see about the total market structure? What would you say is happening right now?
Downtrend, and then it started consolidating.
Awesome. Wow. That's well put, right? So on the monthly time frame, if we're going to be honest with one another, is that we can see a downtrend. And please note, the reason why I want this to be interactive is because obviously analyses tend to be subjective. You could be seeing a completely different thing. It doesn't necessarily mean what you're seeing is wrong, by the way. It's just about, can you take advantage of what you're seeing? Do you understand? To actually make a profit, interpreting that past data. So if you see something, and even if you have questions, please shout. Okay. So like what you said, Paul, you said that we're actually in a downtrend, right? Because if we look at it, let's look at the characteristics that we discussed. We said in a downtrend we have lower highs and we also have lower lows. I would like to believe, right, that these are the lower highs, right? We have a high, lower high, and we have an area that price is failing to break that can constitute a high. And then we also have these lows. They keep going down. This would be the most recent low right here. So we have this staircase scenario where the market is actually forming lower highs and lower lows. And I like the fact that you also said that we are sitting in a consolidation right now. You understand? So the most recent current market structure showing us actually we're in a consolidative state. We have said that in a consolidative state, we have the market playing between support and resistance. We talked about ceilings and floor. We can clearly see that, guess what? At this floor, we're failing to go below what we have deemed the support. And we can also clearly see that at this resistance, we're failing to break above what we have deemed and called the ceiling. And another thing about a consolidation, it's all about probabilities. We can clearly see that each time we touch the resistance, for some reason, speculation has that we find our way to the support, right? Touch resistance, find our way to the support. Every time we touch the support, we find our way to the resistance. Support, we find our way to the resistance. It seems we have just come from touching this support, and voila. Could that not mean that we're on our way there? These are the questions we need to ask ourselves. You understand? While we are time frames. All right. So well done for that. So on the monthly time frame, we're in a consolidated state. And I would like to inform you that I have chosen a buy bias right now. The reason why I've chosen a buy bias is that from this consolidative state, once again, we're coming from touching the bottom, and it seems like we're on our way to the upside. And also, just this month's candle shows me that we've been buying in a healthy way as well. You can clearly see that obviously on the monthly time frame, each candle represents a month of trading activity. And for this month, for the most part, we've been actually going up. Today is the 22nd of September, all right? And so from the inception of this candle, from the beginning of this month, we've actually been pushing up. And everything that's happening right now is probably a slight retracement so that we continue to the upside. It's possible because now the market cannot, and I mean cannot move in waves, all right? Sorry, it cannot move in a straight line. It moves in waves. So on its way up, it will find some form of supply and it will cause the retracements. But because of that buy sentiment, the demand when we meet a higher low as we go down to the lower time frames should ensue. Okay, cool. Now, beautiful. I like that. Now, before we scale down to the weekly time frame, I also, between the time frames, use what we call lines of sensitivities. I'm sure by now you have kind of figured out what that concept is, because everything is about probability. For me, I like to use these lines of sensitivities, which are typically just horizontal lines that show us areas where we've had buy interest or sell interest from the past. And I just want to use that in line with the market momentum. So over here, I would like to just, for now, put this green line here before we scale down. Because for me, I mean, it's showing me a lot of information about that line, if I can put it that way. In fact, I can see that price came, it sat over there and it bought, right? This is the monthly time frame. So that's a lot of buying movement that is originated from that line. It came here, it sat, and it also bought for a full month, right? Over here, to a certain extent, we had a slight rejection over here, So for me, I can clearly see that there's something about this line. And even when I look at these lines of sensitivity, what I like to do at times is to customize them so that I can find if there's a whole number nearby, right? So as you can see over here, I can maybe use level 175, you understand? I have said that at these whole numbers, you will find that the market has a tendency of there being a lot of orders being pushed around whole numbers. So we can clearly see that level 175 is an area where there's a lot of buy interest. And now we have broken above it. Now on our way up, I wouldn't be so surprised if we get a retracement into level 175 and then we can continue. In fact, what is likely to happen is that this is probably the most recent low on some other time frame. And if we come into these levels, we're probably going to then, guess what, be able to find some buy positions. By it being the most recent low, can you see, while we're still on the monthly, can you see that I've gone to the line graph and you see that we have printed a low there and we went up? You see that? And guess what?
Yeah.
It's possible.
Let me ask a question. So, let me ask a question. Your line of sensitivity, so it includes those quarter numbers plus the areas of rejection. That's what makes up the line of sensitivity.
Yes. So for areas of rejection from the past, that's what makes a line of sensitivity. So obviously we need two. If there's just one rejection, it's a random thing on the chart. But if there's two or more rejections at a specific point, exactly, surely there's something about that point. Are we together? And to validate it further, it would be nice if it's also a whole number. It doesn't have to always be, but if you see 175 there, it could mean something for you. Are we together? Okay. Right. Now, let's scale down to the lower time frames and assess what's going on. Right. We're going to go to the weekly time frame. Now, on the weekly time frame, look at what we have. We have that line of sensitivity, right? We have now this area where the market has been buying. I would want to call this a buying market structure. I'm just going to delete that support because we don't need it anymore. We have already chosen our sentiment. We have said that we want to be buying for now, right? Now, I want us to pay a close attention to what's been happening here. For the past, couple of weeks, we've been actually buying, obviously, right? And within that buying, I want you to see this. Can you see at the most recent low, right? Can you see that we have a most recent low and it's maintained at that 175, which is our line of sensitivity, right? So I definitely, once again, want to be interested there. And if I go to the line graph, I would want to assess quite quickly what the market structure looks like, right? These, in my opinion, it's strictly my opinion, right? You might be seeing something else. Please remember that. This is a high. We have a higher high, and probably right now we're in the process of forming a higher high. And these are the lows, right? This would be the low, okay? And this would be the most recent low, somewhere around here. And at 175, we're likely to print, do you understand? We are likely to fail to break this low. It's a heavy low, likely to fail to break it, and then we get that continuation. Okay, so we are definitely, or I don't want to use the word definitely, but what I mean to say is that we are very much interested there. You understand? For V50, what we're being shown is making us very interested at that level. So now let's go to the daily, because remember, as we scale down the time frames, right? It's important that we realize that we can stop on the M30 and all those things. Right? So this is the zone.
So rounding up.
Sorry?
Hello?
Yes?
So when you create a line of sensitivity and then rounding up the number,
yeah,
you basically do that on the monthly and the weekly.
No, you can even do it on the daily, whatever. Look, the thing is, the line of sensitivity, we don't have a specific time frame for it. But obviously, if you're on the weekly, it shows you like a holistic view. It's going to be easier for you to view a line that has had, sentiment from that line from the past. You understand? Weekly data is obviously showing you more information across from a longer period of time. So a line of sensitivity from the H1 is limited. You understand what I'm saying? When comparing to a line of sensitivity from the week. So right now, on the daily time frame, we have this scenario, okay? This is the long-term scenario, because this would take a couple of days for it to materialize. We'd call this a high. We'd call everything happening around this region a high. And, the best thing that we would want is for price to come back in here. Then we really become buy biased, okay? But that's not what's happening. And does it mean that right now we sit on our hands? It could be. It now depends. That for sure, what I don't want you guys to ever do is to make decisions for the market, meaning that you can see that it's clearly a buying market, and then you're going to go and look for sells simply because you're assuming that the market will come back there.
Yeah.
This is
That's
what
me, right?
you know what I mean? That's what we call jumping the gun. And the market really, really loves it, because even right now, most traders, what do you think they were probably doing? They probably had a trend line over here. It's kind of, this would be the trend line here. And break of trend line, they started selling, right? And look at what's happening to them now. To show you how it's not the best thing to reverse trade. Get your bias, get your sentiment, get your key point of interest, and wait. This is why right now we don't have a setup on Volatility 50, because Lord knows what this market could want to do with people for now. It could want to do this, and play some games, and then finally return. Okay, but we can still scale down to the lower time frames. We still have some bandwidth. We have H4, we have H1, we have M30 to see what's there on the H4. Right. So what's actually happening on the H4 right now is that, in my opinion, I see that we're trying to find our way down here. But that will not happen easily, because there's demand from the past that will inhibit that process. So for instance, you see this here, prices failed to break this level of demand from the past. That's why it's moving again. So it might need to go and fetch some supply. And that is when, once it's got that supply, that is only when it would then be able to break that. Right. So there you have it. If you visit Volatility 50, you will realize that price did exactly as speculated. As you can see, this is the point of interest that we had. And furthermore, this is the line of sensitivity at level 175 that we pinpointed as we did our top-down analysis. Price literally came and sat at that line of sensitivity. And this being on the daily time frame, price has been buying ever since. If you like what you see, feel free to contact me for mentorship. The description contains all the information with regards to how you can get a hold of me, and we can take it from there. Until next time, ciao.